Alright, so in this video, I'm going to basically walk you through charting support and resistance. Okay, so charting support and resistance is really nothing complicated about it at all. You just have to know what to look for. And what I'm going to show you is really, really, really easy to apply, and this will work for any market conditions that you're possibly trading. Okay, whether it's Forex, futures, or the regular options market that we all trade together. Okay. So the first tool that I'm going to use, and I'm on TradingView, I'm going to get up the horizontal line tool. Okay, so this is going to allow me to draw lines horizontally on my screen. Okay, and how I chart my support and resistance is actually really, really easy. Okay, I use something called the 2 to 3 touch rule. Okay, now what that means is that I'm looking for price on these candles, and we're on the daily time frame, by the way. So I'm looking for candles on the daily time frame to touch the same price level at least 2 times, preferably 3. Okay? Once you get those 2 touches at the same level, that goes to show that there are buyers or sellers sitting there at that price level that will then move price accordingly. Okay? So if it's a resistance level, let's say right here, for instance, right here for Oracle, ORCL on the daily, I can see right here that there is a resistance level right here, roughly at $91.20. Okay, so I go ahead and mark it. The reason why I picked this level is because 2 touches right here on the daily time frame. We have July 22nd and then July 23rd. Notice the 2 touches off of this price level that Oracle gives us right there on the daily time frame. That tells me that there are sellers sitting there, so I mark that level. Okay, that is now a resistance level, but I'm right now at this point in time, it was a resistance level. I'm not going to change colors on it or anything because I don't want to confuse myself. I want to keep this as simple as possible. Now, this occurs on July 22nd and July 23rd. Let's fast forward in time here. Notice how Oracle right here on August 13th, and let me zoom in some. Notice how on August 13th right here, look what happens when price runs up to 91.20 again. See this long top wick that price gives us? That tells me that that resistance level is still in play. There are still sellers sitting here waiting to push price back down. Now look what happens again on August 17th. Price pushes beyond our resistance level. So it actually goes above 91.20. And it looks like it gets a high of 91.82 on the day. And this is on August 17th. But notice what happens. Price closes back below that resistance level. And then on the following day, August 18th, look at the top wick that the daily candle gives us. Buyers again push price just under that 91.20 level that we have marked right here. They push it just under that level, and then they get rejected. And you can see sellers on August 18th close price down near $88.76. Okay, so this important level that I was able to mark came from 2 touches all the way back here at the end of July. More recently, let's look at it again. We can see that this level is still in play just this past week. Okay, notice right here there's some selling pressure as we get up to 91.20. There's a little bit of a top wick up there, but not really. So that's good to see. Okay, now let's look at, better yet, September 27th daily candle. Look at this little top wick up here. Buyers are there. They push price over this trend line, or excuse me, this resistance level just barely. It looks like they maybe get it 10 cents beyond it, and then they get pushed back down lower again. Okay, so this level that we marked using the 2 to 3 touch rule from back in July is still in play as we get into the month of October. Okay, but let's keep moving along Oracle's chart, and we'll mark some levels out through this video. Okay, let's look up for some support levels. Okay, again, the same rule applies, 2 to 3 touch rule. Okay, so now look, I'm eyeing this support level right here from July 13th daily candle to July 16th daily candle. We can see right here that they make a double bottom off the same price level, and that is 86.53 roughly. Okay, so you can round down 3 cents if you want and just say 86.50 is your price level, and that would be perfectly fine. But this level is marked at 86.53. We have a double bottom from July 13th and July 16th, maybe not necessarily a double bottom because there's 2 days in between there, but the buyers bounce price on July 16th and July, July 16th and July 13th, my bad, off of this 86.53 level. Okay, now let's fast forward in time again. Look at this July 26th candle right here. Look where buyers step in to hold price up. Look at this long bottom wick that this daily candle gives us right here on July 26th. Right off of, or actually not right off of, just above this 86.53 level. So now we have a support level marked. Okay, and this is all using the 2 to 3 touch rule. You look for a minimum of 2 touches off of the same price level, and now you have a level. Okay, now let's keep moving along on Oracle's chart. Let's see, we have another one right here that buyers are giving us at 88.76. Okay, look, let's see how many touches we get off this level. We get one on August 5th, we get one on August 6th, we get another on August 12th. So yeah, I mean, there's 3 touches right there as support. Now, does it turn into resistance? Yes, it does. Okay, so remember, I'm marking these as support and resistance levels, but remember that old adage, old resistance becomes new support, and then old support becomes new resistance. Okay, that adage right here applies very, very well to this. Okay, let's look right here. On September 22nd, look where price gets rejected, right at this 88.76 level. And then look at the following day on September 23rd, look where sellers drop price down, right down to this 88.76 level, and buyers take price back up to the upside to push the next level. Okay, this is a super easy rule that you can apply in your trading, and this is to give you price targets for your trades. Okay, here's another level that we can mark right here for Oracle. Look at these 3 rejections right here. They're very close to the same area. Let's see what we mark it at. That level was marked at 90.50, so a nice psychological level. Okay, these 3 rejections right here, 1, 2, 3, that's the 3 touch rule coming into play. 2 touches at a minimum is what you should be looking for. 3 touches reaffirms that level, and that is a strong level. The more touches you have, the more important that level is and how important it should tell you. Okay, we see 3 touches right here off of 90.50. And that is back in the beginning to middle of August that we get these touches. Okay, now look right in here. We get more touches off of this, and this is in the middle of September, from the beginning of September, into the middle of September. It starts September 2nd, and then the last touch was on September 13th. Okay, use this really easy, simple 2 to 3 touch rule in your charting so you can identify support and resistance levels. And when you are able to identify these levels and you have them marked and charted on your charts for every ticker out there that you trade, use them as price targets in your trading. Okay, if you are on my team and you follow my trades, you know I use Fibonacci levels as my price targets. This is another way that you can get price targets in your trading. If you struggle to identify price targets, okay, this is really easy. Let's see right here. We have another level that we can mark. Look at this one touch right here, and here's our second touch. Now this is going to be off of $92, which used to be all-time high for Oracle, so that makes it a little bit easier. But now, look back at this daily candle on August 17th. It had a high of roughly $91.80. Look where it got rejected, 20 cents below $92. So sellers are consistently sitting at $92. Okay, we can see 3 rejections actually. September 28th, September 29th, and then finally October 5th. Okay, that's 3 touches, arguably 4 if you wanted to make that argument, off of $92. So we have another price level marked. Now this is all-time high territory for Oracle. Look what happens when they break above $92. Look where price is now. $94.39 is its closing price on Friday. Once it broke above that $92 resistance, look what happens. It went on a monster run, running actually $3. It hit a high of $95.02. Okay, so once we broke that $92 resistance, look what Oracle does. $3 run to the upside sets a new all-time high. We can mark this all-time high level as well. We don't need to wait for 2 touches. At a minimum, it's all-time high. So we can go ahead and mark that as well. And that's now a new level for us to use for Oracle. For support and resistance, if we're going to be trading Oracle. Okay, here's another level right in here. Now again, this is going to be off of psychological support as well. Look at $88. Look at this bounce that we get right here on August 25th. And then look at this bounce that we get on September 8th. So that's another level that we can mark, excuse me, right there real quick. Okay, and then we can see some selling pressure back in here at the end of July as well off of this $88 level. Okay, so this is a really easy method for you to use in your own trading, to apply in your own trading if you struggle with support and resistance. Okay, so let me break it down to the hourly time frame now, and we'll get a good look at it. Okay, now look at it on the hourly time frame. See how clean these price levels are? Okay, if we wanted to use this in our own trading, these price levels act as price targets for us. Okay, let's look right here. Okay, right here. This is our $92 resistance level. Okay, you can see right here, price Oracle makes an ascending triangle. Let me switch tools here. Makes an ascending triangle right here. And actually, I'm going to switch colors here real quick so it makes it easier to see. Do yellow. Okay, price makes an ascending triangle right here on the hourly time frame as price approaches this $92 resistance. Now, an ascending triangle is technically a bullish breakout pattern because price breaks out to the upside. However, that's not what we got here. We can see Oracle actually started breaking down at a key resistance level of $92. We know that because of our 2 to 3 touch rules that we applied on our chart for the daily time frame. So hypothetically, if we were to apply this on our own trade, if we were trading Oracle, we see a breakdown at this resistance of $92. We see a bullish pattern, but look what price is doing. We get a shooting star candle at the resistance that's bearish, and then look at this hourly candle right here for Oracle. It breaks down out of the ascending triangle. This is more than enough for us to swing puts overnight. We have a rejection at a key resistance level. We have price breaking down out of a support trend line and out of a pattern. We can swing puts overnight and look at the move that we could catch. Okay, that's just one hypothetical way that you can apply this 2 or 3 touch rule into your trading as well. Okay, now once price breaks above a resistance level, once price breaks above a level, in this case it will be resistance right here at 88.78. We can use the next price target, we can use our next level as our price target. Okay, so from $88, let's say we flip to 90.50 as our price target. And this is just day trading if we wanted to on October 1st. Okay, look at the run that Oracle does. Once we get above 88.76, Oracle pushes a high of 90.22. So that's nearly a $2 move that we could have day traded Oracle calls on October 1st just using these levels that we marked on the daily time frame. Okay, this is a really easy method to apply in your own trading. Definitely don't be afraid to use it. If Fibonacci levels are too confusing for you, feel free to use this 2 to 3 touch rule as well, because this is really easy and really simple, and this can be applied to any ticker out there. Okay, whether it's the energy sector, whether it's oil, whether it's /ES, if you're a futures trader and whatnot, whatever ticker you are trading, this simple approach to charting easily applied to every ticker out there. Okay, if you have any questions, definitely don't hesitate to ask me in the server. Please do use this to your advantage. Okay, and if you do have any questions, definitely don't hesitate to ask in the server.